Use the support and resistance strategy for trading in the market. Hey guys, and welcome back to TradingFi. This is the channel that provides you with various informative content on the stock market as well as technical analysis. And so our today's video is based on support and resistance trading, wherein we will understand what is support, what is resistance, how will you identify them in the market, how to use them, and most importantly, how to trade on support and resistance with the technique of greater confirmation. And this is like the technique or strategy, whatever you call, which is used by most of the advanced or pro trader in the market. And in this video, I am going to teach you that technique, the so-called strategy, which will help you in increasing your accuracy while trading. So if you want to take your capital, your trading to a next level, make sure you're watching this video till the end. Do not skip this video. And one more thing, if you are new to this channel or not yet subscribed to this channel, make sure you do it so that you won't miss any upcoming videos or updates on the market on our channel. So let's start with support and resistance. And let us first understand what is support. Now as you see on your screen, a price is falling down. And as you can notice, this price is not going down below a certain level. This level in the market is what we call as support level. So you see, support is basically a price level from where the market start bouncing back. This is because at this support level, the buyers in the market, the bulls in the market are very active. So eventually they buy the stock, they apply the buying pressure and the market goes up. So you see, whenever the price comes down and hit the support, it is likely to give a bullish move. And one thing, let me tell you that the number of times the price hits the support, it will make the support more stronger. You know, if the price is taking support multiple times on a level, we get to know that the bulls are frequently getting active at this level. And so when next time the price again takes support on that level, it is likely to go bullish. And that's where we can plan our trade. So this is all about support. Now let us understand what is resistance. You see, resistance is a type of level which prevents the price from going up. You understand, it pushes the price down. And as you can see on your screen, that's how a resistance acts like. It is just opposite to support. And like we know that the support bounces the price up, the resistance pushes the price down. And you know, at the resistance, the bears are mostly active. So whenever the price hits the resistance, it is likely to go down. And so whenever the price takes the resistance or hits the resistance, we can plan a shorting trade. Now, as promised at the start of this video, I am going to tell you something which will boost your accuracy while trading on support and resistance. This is a type of technique which is called as change in polarity. Now, what do you mean by change in polarity? What do you mean by polarity? You see, polarity means nature, the behavior of the market, the behavior of an indicator, the nature of support and resistance is known as polarity. And the change in polarity means change in that nature, change in the support and resistance. So how will you use this change in polarity for trading? You will understand. So basically, if you see, there are two types of change in polarity. First one is the support becomes resistance. Let's understand this. You see, the price is taking a support on this level. That means that the bulls are most active over here. The bulls are controlling the market. But when the price breaks this support, we get to know that the bears have entered into the picture. So once the price breaks this support, there are high chances that it will take resistance on the same level where it was previously taking support. You see, this was the level where the price was taking the support, and after breakout, the price is taking resistance on the same level. This is what we call as support becomes resistance. This is what is known as change in polarity. This is one type of change in polarity. The second one is the resistance becomes the support. And here you can see that the price is firstly taking resistance. It is resisting at a level. That means the bears are controlling the market. The bears are pushing the price down. And once the price breaks this resistance, there are high chances that it will again take support on the same level where it was taking the resistance. You see, here the level which was acting as resistance previously is now acting as support for the price. This is how the nature of support and resistance changes. And for the change in polarity, a breakout is must either on the resistance side or the support side. Now let us understand how will we use the change in polarity, the CIP which we call, for trading in the market. With maybe a greater confirmation, how can we trade on the support and resistance using CIP? Let us understand this. You see, a price is taking a resistance at this level. So when the price is near to the resistance, there are two conditions. Either the price will accept the resistance, it will go down, because the bears will be applying the pressure to push the market down. And the next condition is that this price will break the resistance. You can see on your screen a breakout is given here. So now we come to know that the bears are going weak in the market and the bulls have taken the control. In the first condition where the price accepts the resistance, we will look for selling the price. But now when a breakout is given, we get to know that the market will be going bullish. But let me tell you that this is one of the mistakes that most of the novice traders, most of the beginner trader in the market make. Listen carefully that most of the breakouts in the market happens to be false. Yes, it's right. Most of the breakout in the market are false. So if a trader buys the stock on a breakout and the breakout fails, he will be making loss. So you can say that this is a trap which is set for the bulls in the market. So if not on the breakout, how the professional trader trade in the market? You see, while trading on support and resistance, they make use of CIP, change in polarity, for trading. So if a stock simply gives a breakout through the resistance, we will wait for the confirmation, such a confirmation where the resistance becomes the support. And as you can see on your screen, this is where the uptrend is confirmed. This is where the bullish movement is confirmed in the market. So here I will look for buying the stock after the pullback, and I will place the stop loss just few points below the low. So conditionally the probability of me going wrong is very less, and even if I go wrong, I will be making very small loss. But if the market continues its uptrend, the profit against the risk is pretty good enough. So always remember that whichever strategy, whichever indicator, whichever tool you might use, always trade on the confirmation so that your winning rate, your winning probability is always high. Now let us understand one more example. You see a price is taking support at this level. So we got two conditions over here. First, it will accept this support, it will accept the bullish pressure and show some upward move. So if the condition 1 happens, we will buy the stock and make a decent profit. But in the second condition, if the price breaks the support, you see a breakout is given by the price over here. And as we know, we are not going to enter the trade on a breakout, but on the confirmation of breakout through CIP. So there, if the price takes resistance where it was previously taking support, we will look for trading. We will short the price over here and place the stop loss just above the high. So in case if the trade goes wrong, our loss is very minimum. But if the price continues its downtrend, we will be making profit, which is good enough. And the risk to reward ratio in this trade will be around 1:8 or 1:9, which is really phenomenal in the market. So now you must always trade on the confirmation. So now you know that the breakouts, the chart patterns, the candlestick patterns are all the signals. And remember that we must always track the signal, but we will trade only on the confirmation. And if you implement this in your trading, you can take your trading to a next level. So lastly, thank you for watching this video till the end. If you like the video, please hit the like button. Share this video as much as possible and do not miss such many contents on the stock market as well as technical analysis. Make sure you subscribe to this channel. I will see you in the next video.